Futures point to a higher open following Germany's overwhelming approval of a stronger bailout fund to aid European countries tangled in the debt crisis. Asian markets closed up on the day while Europe trades mixed. There's a slew of economic data expected to hit the tape today, including GDP, jobless claims, and pending home sales. I'm Jill Malandrino, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Jill Malandrino, and this is your morning call. So futures are up nicely. Germany voted to extend more support to the European nations dealing with the debt crisis. Asia finished up. Europe's trading a bit mixed. Oil's moving higher, so it looks like we have a nice start to the day.
All right, so we have a nice start to the day, but really we're off the highs already before coming in here. I woke up, the futures were up like 13 handles. I think they're up 5 or 6, and a lot could change with all those numbers coming out at 8:30. You have GDP, you have the jobless claims. There's just a lot going on. So as far as what I'm looking at, again, is the action of the market. The last 2 days we had big sell-offs into the end of the day. I think we were down like 24 handles, so being up 7 or 8 really is a non-event. A lot of traders are probably going to come in and try and short that, because the action is just getting more and more bearish. I'm seeing it line up in the individual stocks, and obviously until we take out this lower range, you can't be fully all in short or whatnot, because anyone adding to their shorts at the bottom end is getting crushed. But the trade continues where after 3 up days, you take profits, you trail some, you use stops. After 3 down days, maybe you buy a little bit for a pop. One day that's going to change, and we need to be on top of that, because if you look at the chart of the SPX, you will see right here the range is starting to constrict. The highs are starting to get lower. If you see here, this was the last time we went to the upper end of the range, right around the 29th. Came down, held higher, came back up, couldn't get as high. This time went down to the bottom of the range, put in a small double bottom, and then we rallied up well short of the 50-day and the last 2 highs. So question is right now, you have a new point of reference, which we'll take a little closer look here at 1150, and we're opening up in the middle end of this range. I would say if you're long still, trailers, you have to get out if we trade below 1150, and if you're looking to add to some shorts, once we break through here, add a little bit early, and just know you're cheating, because until we really resolve to the downside, you can't get aggressive here. You need to stay with the same strategy.
Right. I'm just having a really hard time wrapping my head around how the futures are predicated on one vote with the European debt crisis. Like, did we completely forget that we have jobless claims today, GDP? We also have to look at the nat gas numbers coming out. We're heading into that season where that's going to make more of a difference. So you wonder, like, have we thought about anything else just besides European debt?
Well, the market likes to obsess, and
right.
The market obsesses over certain things. And right now they're obsessed with whether or not Greek is going to be a hard default and easy default. Will they get the last tranche? Or now they're already starting to talk about the second one, that this $8 billion is nothing. The billions these days are like nothing. Give me $1 billion. It's like they make it like millionaire, billionaire. It's like one big generalization. The fact of the matter is your money is hard to come by. Your investments must be protected. And right now there's a lot to look at. And even like AMD came out today, and they lowered all of next year by half, I think, or something like that. So that's another problem the market's going to be facing in the next week or two, is sometimes in third quarter reports they bring down, or they talk about the next year's numbers, and if they start bringing those down, everyone's been talking about 100 in earnings on S&P, it could be 85, then all of a sudden these cheap PEs don't look so cheap anymore. So anyway, look at this range, which we have here in the S&P. If it starts to resolve to the downside, if you want to stay in macro tier 1, that's okay. But if we start to break below 1120, just know that on the weekly chart, we really could hit this 1050 to 1040 area in a swoosh, because typically bottoms are put in October, and they're predicated before a big swoosh. Question is, do we get that, and how does that transpire?
Moving along to the sectors, let's take a look at the exchanges. Another record month in August, and I feel like we say this every month, record June, July, August, because of all the volatility, so naturally the volume for the exchanges is going to go up. We also have the margin requirements being raised across the board. Is that why gold? Is that why silver? Have those been crushed? Is that part of the reason? So I think there's a lot of opportunity within this space. We'll start off with CME Group and ICE. ICE came out with a new Brent product, which could potentially break into CME's market share with that contract.
Well, I guess we'll look at ICE first. ICE, I just looked at the chart. It's showing some relative strength. I haven't been trading it lately. I guess this is one of the leaders in this group, because you will see here on ICE, you go back to the daily chart, that it had a nice move from the lows. This is the uptrend that it's been following. It started to accelerate up into resistance. You did have 2 down days, but I would say if you want to trade it tight, you could own it, versus this 119. But if it breaks 118, I could see more downside. So if you're long this, use 118 as a stop. And if it starts to get really frisky, you will see that on this chart, you have somewhat of a downtrend here, that it's going to come into play. So if this could hold higher and stay above this 118, 119, it could really get going above 125, but you're going to need to see a really strong market for that.
Okay, moving along to CBOE. That's where the VIX, that's home. So there's clearly a lot of volume on that.
Yes, VIX has been elevated for numerous days, so there's been a lot of activity there. CBOE, the stock, has actually performed with it. So if you look here at the CBOE, you will see a really nice move. This is why you want to time these things. Once it went above 24, had a quick move back into resistance around 27. Short term on CBOE, I do see an outside day. I talk about these all the time. This is when it tries to push through and break out and fails. This was your sell signal after a big move from 23 or lower. So if you sold here, you weren't in yesterday's downdraft. But if you're still there, I would just make sure that it holds this 26 area. If it holds this 26, it's still in the game. If it breaks this, you could have a little bit of a retracement back to this 24.61. But now what I'm going to show you is, these two stocks are strong relative strength. CME isn't looking as strong. It's had a move, but to me, it's not showing as much relative strength. So if you take a look here, where the other stocks were already through resistance, this had a great move when we talked about it on options profits, right back to 270, and now it's stuck in this range with two potent down days. I don't like to see two in a row because typically that means no bargain hunters are coming in yet. Maybe they do today, but if we start to get below 250 on CME, there's really nothing, versus support to 240. So know your levels on CME.
Right, and to round it off with NASDAQ ticker NDAQ, they're slowly introducing more options products into the market as well. Most recently with the NASDAQ Alpha Index options that we've spoken about several times on options profits and year and have done quite well with the product. Okay,
NDAQ, I haven't looked at it in a while, but I do hear some chirping about it. If you look here on the chart, you will see that it did have a decent move off of the lower 20s up until about 25, but just like I guess both all these exchange stocks, they've had two big down days, so you never really want to sell on the third, but you have to take notice because this also tried to push through. This was your sell signal short term after a move from 23. So now the question is, can it hold higher? I'd like to see this hold if you're long 23, actually 23 to 23.75. If it doesn't hold this area, the next support or line in the sand would be 22, which is this small rising channel.
So these exchanges are essentially trading along with the overall market as we discussed when we first opened.
Yeah, and some are acting a little bit better and some are acting a little bit worse. I'd rather you stay with the best acting stocks in every sector because that's the only stocks that are worthy of your attention whatsoever in these dangerous, volatile times.
Let's jump to a quick commercial and we come back. We're going right into the trenches.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, we got to take off those glasses.
Welcome back to the morning call. We're going to jump into the trenches with the ETFs that have been headwinds for the market. So let's start off with OIH, the oil sector ETF.
This group earlier in the year was the leading group, then it turned into the laggard, but it just goes to show you how you can still time these scenarios, but you have to know what you're looking to get out of them because we spoke about buying it with the Red Dog reversal through 108, gave some price targets, gave you some levels to get stopped out if you were trailing it. So look at the chart of the OIHs. Let me show you what I'm talking about. If you look at the chart here, this was your buy strategy. When it made a new low, came back above, we talked about buying 108, talked you through it, came in long. Okay, and then we were in that gap. If you guys remember 2 days ago, I'm like, I am selling my OIHs here. This is what I was looking to get out, 5-6%. Great way to time it, coming into resistance. And I said, if you were holding on to these things, use this as your stop. This was the line that we drew in yesterday's morning call. Here is your stop. I figured it had to hold 112 to show commitment. Pow. That's your way out. That's how you manage your trades actively. That's how you continue to take cash flow out of the market. If it held the 112 and went sideways and we could have added to it, great. Then you could stay with the trade. But until these things have commitment and show some type of buy interest higher, just take your trades, get out of the way, and maybe even flip short. Some guys flip short that day. I just said I'm taking the profits.
That's why you have to be so nimble and be able to trade range bound in this market. Let's move on to the XLI, another sector too. We need these sectors to show some sort of follow through in order to get any conviction in this market, and I just don't see it right now.
Well, at least the XLI now, this is the group that led us lower on the head and shoulders top pattern. It was weaker well before the S&P and the diamonds. Now it seems to have caught up and it's just trading in tangent with the spider. So if you take a look here on the XLI, you will see that it's somewhat like, you know, the spiders where, you know, made a tiny bit of a new low, but nothing severe. Pop right back up into the range, made a lower high, turned lower yesterday. Now, I don't think you need to be in this group. I think I'd rather have you, if you're doing an ETF, just trade the SPX because it's not giving you any added bang for the buck. And we always like bang for the buck. If you're going to invest, you might as well have something showing relative strength. If you're going to short something, make sure it's showing relative weakness.
Moving along to DBA, the ag sector ETF. And I particularly like this sector, although it's been under a little bit of pressure this week.
Yes, I like to look at the mood just because I like the name, you know, the
Moo.
agriculture. Anyway, we talked about this ETF also, same scenario, red dog reversal. Here was, you know, where it made a new low, came back above. This was your 43.91. This was your buy area. I talked about filling the gap, same way the OAHs. And this is where, you know, for a short-term trade, nice percentage. You know, but we turn down, fill the gap to this side. If you're still in here, make sure you use 44 as your stop. You look at a stock like we spoke about Mosaic. Okay, I have to bring it up. You know, for a short-term day trade, it was nice because the strategy was to buy it through this 56.50. Okay, when it made a new low, came back up. And most people took the day and a half trade. Some of you guys are stuck around for earnings. You know, you're in your options. It's okay. It's still in the game as it didn't make a new low yet. You're just going to need more time. If you're in the stock, I would say if it starts to break below this area, you really have to stop yourself out. If it holds tight, you know, and goes sideways, develops a new pivot, maybe you could add above this 61.30 for a bigger move in the fourth quarter, but this is for those with a bigger time horizon.
Right, and that's what we did for our options profits trade on Tuesday, and this is something I'm actually very, very convicted in long term. We have a big catalyst coming up on October 6th with their analyst day. All of the bad news is out of the stock with the pre-announcement, then the actual earnings announcement. Our option strategy that we have is all the way out till March, which is forever away in options world. So this is something that we still are involved with from the options perspective, and fundamentally, it's a stock that I still like going long. Moving along to the XLF, the financials.
With all that said,
moving along to my favorite sector, just kidding, the financials.
Well, the financials started to rally before the pressured ETFs on Friday because the other ones made their lows on Monday. So that gave you some clues that they were showing you little alpha, and that's hard to say for financials. If you look here, you know, XLF, you will see that it had a nice rally. And it was interesting too because Bob Pisani came back from vacation. He's like, what's going on in the markets? I'm like, financials just had 3 up days in a row. He's like, that's great. Does that show momentum? I'm like, no. That means you sell it right into resistance around 12.50. And if you did so, you had a nice trade. It's still kind of holding the bottom end of this range, holding in there. If you're still long it, I would say you must stop yourself out if it starts going through 11.74. If you look at a stock like Goldman Sachs, it also gave you, 3 up days into this downtrend. That's why you have to have a path paved ahead of you. Most sold into that, and we turn lower. I guess, you could look at it versus levels as long as it doesn't break these lows. But to me, I'm just taking it after 3 down days. I'm not interested after 2.
Right. It's just like we said, that's why you have to recognize your patterns. Like we said, when we open up the segment, have to recognize your patterns, and this is trading along just like with the overall market. Rounding out the sectors, let's take a look at the large cap growth XLK, high tech.
Sorry, XLK? Yep. XLK, take a look here, showing some relative strength. This has an uptrend, I guess, with like the Qs. Here you go. It's into the moving averages. It can't really reclaim them yet. Here's a sign of technical strength. I would say as long as it stays above 24, it's in the game to show leadership. You do have a small downtrend, which it can't get above yet. If you can hang out in here, if we're going to start to resolve to the upside, you'll see this get above 25 because this is the leadership area.
So you start talking about Mosaic and something I'm all excited about, and then I can't even get the word tech out.
That's all right.
Moving along for some quick cash, let's do some quick hits. We have to start off with Apple and Amazon. There was a lot going on there yesterday as Amazon launched a bunch of new products.
Yeah, both of them continue to be very important to watch. Right. Apple, ever since that report from JP Morgan about 25% less supply is needed for the iPad, it's been a little choppy, a little weaker. But it's still tradable. It's still holding above the 21-day. So if you look here at the chart, you will see that, you do have this upper area where we did say still can't chase excitement even if it's the best stock in the world. And then this was the day that the JP Morgan note came out. You could have added to it. And I remember being here on Tuesday with Jill saying probably a spot to take off some in front of 410, just because if you're in tier 2, I'm not ready for it to just break out yet. Yesterday it went negative. So watch this area very close. It's 395 to 392. This is very, very important to hold. This is the 21-day moving average. If we start to break below it, I think the tech sector as a whole is going to get a little bit pressured, and then you could see it move down to the 50-day, which is at 385. And as far as Amazon is concerned, acted really well yesterday in the face of all that pressure from the market. See if it can continue, because sometimes the day after doesn't act the same. I see a small macro wedge being built here. This is still above the 21-day, still a tier 1, long, but it's not going to be a momentum long until it clears here, and we're going to need a better market for that. So just keep it tight. And if you are looking to get short, if it happens to break below 220 and closes below it, this too could see the 50-day at 211.
Let's move along to Google. There was a lot of options activity yesterday in Sina and what was the other one? Yoku. We saw a lot of activity in the Chinese internet names. So let's see.
Well, they were weak. Was it bullish or was it?
We saw a lot of bearish options activity.
All right. Well, if you want to talk bearish, both these charts, Baidu and Sina, have been broken. We had a small bounce. They still don't look good. So I'll give you a quick hit. I think you have to avoid it. You have Sina now, on the lows of this entire move, relatively quick. So this is a lot of relative weakness. This breaks below 80. Guys on my floor will be looking to short it. Baidu gave you a short to strength. We talked about it in my chat room. We said that you have a small double bottom versus 115 that perhaps it could rally back up to get to this gap, turn lower. This too, if it starts breaking below 120, it's in trouble. But Google's been acting a little bit better. Google, still in this range, still getting nowhere. Actually, it doesn't look that great as I look at it, but it's still in this middle range, I guess, like most things. I think long-term Google will be fine as a trade. It's choppy. Just keep it light in Google. It's hard to get your arms around Google just because also it's a $530 stock.
Exactly. Now, tech bellwether, IBM, Evan and I have traded that before. That's been pretty active too over the past few days.
It's one of the chosen ones. It could be one of your tier 1 macro longs if you have to be in it. As far as the chart's concerned, let me take a quick look. This is a reversal. This is that outside day I talk about, traded through the high here of 179, closed below. I think this easily could fill this gap and come back down to the 170s. I don't want to see you buy it up here. I'd rather see you buy it at this 170 area. Look at the move it had from 165, from 160. So it should pull back into this area before you're looking to get long it for a trade.
Okay, so for quick hits today, we're going to be in the tech sector, so it's almost like the tech sector quick hits. So for trading today and moving into the weekend, we expect volume to be a little bit lower because of the holidays. How are we positioning ourselves?
Well, we have a lot of time left. I feel like it's Thursday. A lot can happen in these 2 days.
It's also end of the quarter too.
Yeah. So what usually happens is sometimes they mark them up. A lot of people have been playing it this week for a markup. That's why they were scared to be short yesterday. But meanwhile, they didn't have enough strength, and they started turning yesterday versus Thursday, Friday. Now the futures are up. So you can't put fully, all your eggs in the bank, the basket that they're going to mark them up because you don't know. You just have to know that exists. Because then people say, I'm just going to short it on quarter's end, but they don't realize that the start of the fourth quarter, hedge fund managers get new allocations to put to work like you saw after the second quarter. So really just watch the action, watch the levels, only get involved when there's an edge. On Tuesday, everyone's like, why are you selling it to 1195? I'm like, I don't have an edge here. We can go to 1200, 1210, fine. They could do it without me. I like my 1130 to 1180. That's a good percentage. So depending where we are going into the weekend, know your time frame, know your risk tolerance, because a lot could happen between now and then. I think macro tier 1, if you have to be in, and only those best stocks, and they're starting to show a little bit of a rollover. For me, I'm coming in short today, and I think I might short the open just to be a little cute, but I won't get stubborn. But there's no edge right here. It's the end of the month. And also, if you're a trader and you're happy with your month, don't push it the last 2 days. Because the last thing you need to do is give some back. And also, if you're behind the 8 ball and you haven't made the money this month that you want to see, don't just start trading the last 2 days to try and make a month, because that could put you behind
even more
for next month.
And Q4 can get really interesting. There are a lot of money managers out there with a ton of cash on the sidelines, and these guys get paid to put their money into stocks or whatever investment vehicle they're in. You don't get paid to sit in cash. So Q4 could really be an exciting time to trade.
The last thing you ever want to do is be allocated a big amount of funds and then not have the availability or the ability to use it because they take it away. So anyway, the trade could change. It's a new quarter, but your rules don't change. You stick to them, and as long as you stick to them, you could stay profitable, you could stay ahead of the curve, and that's what we're looking to do here.
Okay, thank you very much. I'm Jill Malandrino, and that's your morning call for today.